there were some voices who were talking about comparing the earlier deals that would have been done in India, outbound deals in India from India in the space, and if you do the dollar rupee parity at the current levels, then they believe that there is a lot of upside left for a company like BPCL if indeed the divestment were to happen. What's your own prognosis about this entire news and what it may do to the stock?
Thanks for having me on this program. So clearly lots of excitement in this space, whether it's Total, Exxon, BP, Aramco, what have you. So specifically on valuations and what we think about BPCL. So we are considering 5 different valuation approaches in this research note, from some of the parts to peer multiples to transaction comps to recent IPOs, the more classic DCF, what have you. Now, all considered, our base case is 500, right? And this is, in our view, the most likely outcome. Now, is there a path to 700 rupees? Absolutely. The walk up from 500 to 700 is as simple as, in our base case, for example, we're assuming about 6 times EV EBITDA for the refining division, 8 times for marketing. Let's say we put refining at 8 times, and let's say we, which is similar to the Aramco Reliance kind of transaction, and let's say we assumed a 10% type control premium, right? Just those two kind of dynamics gets you towards 700 rupees. So if I had to kind of put odds on that outcome, though, I would probably be at about 10 to 15%. Our base case is, as I said, 500.
And this base case, of course, takes into account what is, according to you, the most ideal deal at the most ideal valuations that you can think of within the space.
This is, if we were to value BPCL, or if we were to put a bid on BPCL, this is as much as we would pay. That's kind of what it's reflecting.
All right. Aditya, just, if you're saying that there is, while obviously you're pegging it at 500, but you're saying there is a path to 700. If there is a path to 700, that means BPCL becomes the most expensive globally amongst its peers in terms of EV to EBITDA. Currently, it's probably neck to neck with what Fuji Oil of Japan gets in terms of its valuations. So how would that stack up then?
So we consider this in our recent research as well, and so on an absolute basis, I think that comment holds, but the way we think about this is to kind of adjust that valuation metric, whether it's EV, EBITDA, or price to book. We prefer price to book. So the way we look at this would be, say, price to book versus forward ROE expectations. And if you plot all the EM refining marketing companies, BPCL is in fact on the line of best fit, right? So we don't see BPCL as being excessively priced at today's levels. So the 2.5 times whatever book and the 20% ROE which we have is consistent with what the broader sector would trade on.
Just to get a sense from you, obviously now the excitement of privatization has come about for BPCL. There is a possibility of the government looking for divestment for IOC as well. Obviously not privatization, but going ahead and divesting some stake in IOC as well. Do you feel that there could be a catch-up in terms of this valuation play for the other domestic players and peers?
So not to put any company in play, but our core thesis here is that we'll be taking profit on BPCL at 350 rupees. This divestment trade made perfect sense. We frankly missed that trade. But at today's prices, what we are recommending investors do is to kind of switch into the likes of GAIL, HPCL, what have you. For us, for similar characteristics, there's far more upside on those companies.
Aditya, let's say if the deal were to happen and if we actually get an MNC player on board, and probably this will be the first time that a global player will have a substantial stake in an Indian oil marketer, because so far it's been held by the government, be it all the 3 oil marketing companies. If that were to happen, I know you've spoken on valuations, but would that also mean re-rating of the entire sector, because the valuation so far could also be suppressed because it was owned by the government of India, or rather is owned by government of India?
Absolutely right. And I think the bigger kind of comment to make there is just that, so analysts including me, we've been kind of cautious on this entire deregulation dynamic, right? In particular at a higher level of crude prices, and the scars of kind of same time last year is clearly very fresh, right? So to the extent that you did get the foreign nationals kind of come in and invest, then that's clearly a big positive for sentiment across the space. And but even in that context, for us, the more obvious trade at today's prices would be some of the other companies which we mentioned, including HP and GAIL.
According to you, Aditya, I mean, if you have actually done that kind of an analysis, what do you feel, or rather, who do you feel will have the most synergies in terms of being a partner and getting on board with BPCL, a global player? Because there are a lot of names that are floating about, but if you've managed to do any sort of calculation, which is going to be the best fit, according to you?
Yeah, look, so this research which we publish is in fact addressing just that, and we've engaged Macquarie's global super majors analyst on this to kind of get a sense of what do the global majors think about BPCL, for example, right? Or how would these assets fit in a global context? And so clearly growth is a key attraction, right? And BP's Bob Dudley has been out there and he's spoken about the great growth rates for fuel in India, what have you. There's gas and LNG interest that clearly fits as well. There are clearly lots of obstacles to consider, right? First is just the ticket size is $8 billion plus, right? This is not a small amount, and the majors are funding their own buyback programs, the dividend programs, acquisitions, example, Total, Africa, and Aramco, for example. So the first point I wanted to make was that so it's not obvious to us that an international oil company such as Total, Shell, BP would make a bid. And one of the reasons was this ticket size and their own commitments to the buyback and dividend programs. The second reason why we think that the IOCs may not consider is just the asset mix for BPCL as is, right? So the price is clearly fuel retail today, not refining, right? And in fact, adding refining capacity overseas is not an agenda item for the majors. Their focus is on energy transition and the transition away from hydrocarbons, right? Total's CEO was at an India Energy Forum and he spoke as much. So refining is not really something which the majors are looking for. And BPCL's assets not really best in class or world scale. Culture, clearly a big issue as well. So, and then the deregulation dynamic, right? So if you kind of put all those pieces together, whether it's a ticket size, deregulation, uncertainty around that, if you are taking a 30-year view, culture, the asset mix, energy transition. For us, the conclusion was that it's more likely that if there is a bid, a national oil company is probably more likely than an international oil company. Within the national oil companies, we clearly know that Aramco is out there looking at downstream markets, whether it's Korea, Malaysia, India. Sinopec is another one which is looking at overseas opportunities. So perhaps if I had to kind of distill it down, we'd probably pick a national oil company and perhaps a JV within that. That's kind of our best guess as we speak.
Aditya, thanks very much. Really appreciate you joining in and putting that report in perspective for us.